Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Not supposed to do it after the 3rd of January, but Happy New Year to everyone. So hope everyone's New Year is off to a great start. We'll get started here in about a minute and a half. I'll introduce our two subject matter experts. And one of the guys we're going to introduce here, Chris, has the Angel Oak tree behind him. So I love that picture. So, but give us a couple minutes, we'll get started. Today, we're going to do a deep product dive into our bank statement program for self-employed borrowers. It's our most popular program. It's still the fastest growing segment of the workforce out there. So, by the time we're done, our two subject matter experts, you're going to be able to be an account executive at Angel Oak. But not only that, you'll be an expert loan officer in what you do and your originations, and be able to talk well to your customer base about self-employed borrowers. So we'll get started here in about 30 seconds. This is going to be recorded. If we don't get to a lot of your questions, we will have your account executive reach out to you no later than tomorrow to get your questions answered. There's also a small survey at the end of this. We're always looking for ways we can do things better and deliver better content, more relevant content to you, and hopefully help you in 2024 grow your business. So just a shameful plug, next week we have our debt service coverage ratio product deep dive into our debt service coverage ratio next Thursday, same time, same day. We'll have some other experts there running that show for you. So again, this is being recorded. We will get this out. All right, let's get started. Probably a familiar face on a lot of our webinars out of our Miami office. Oscar Ungo, please introduce yourself, Oscar.
Hello, everybody. My name's Oscar. I've been with the company over 6 years now. I'm part of the inside sales team. We work with portions of the country, and I wanted to reiterate something that John said. By the end of this call, you're gonna essentially know how to be an AE here because of your expertise on this bank statement program. But do wait until the end of the call, because you're not just going to walk away knowing how to pre-approve borrowers that need bank statement loans. We're also going to teach you where you can find these borrowers and how you can market to them.
Yeah, and then the guy with the Angel Oak tree behind him, Chris Barker, please introduce yourself.
Hello, Chris Barker. I've been with Angel Oak right at 8 years. It's been a glorious, fun time, and always glad to help people out in learning more how to serve self-employed 1099 borrowers. And one thing I just want to say, I always ask people, I say, are you good at VA? And they say, yeah. And I say, well, you ought to be great at bank statement lending, because there's actually more self-employed and 1099 people out there. So with that being said, we're going to learn about that today.
Yeah. Thanks, Chris. Oscar 6 years, Chris 8 years. I'm going on 10, almost a quarter century just of experience here at Angel Oak. So let's get to it. Before we jump into bank statements here, let's do a quick poll question here. And the poll question is, who on this call has originated a bank statement loan in the last 12 months for a self-employed borrower? So while everyone's participating in our poll, Chris mentioned there's more self-employed borrowers than there are VA borrowers. I'm just going to throw out a couple stats while people are responding to the poll question. In 2020, new business applications grew by 24.7% over 2019. We all know what happened in 2020, COVID. A lot of people displaced, wanted to start their own business. So that was the largest increase in new business applications in over 10 years. What happened in 2021? New business applications continued to grow by 22% over 2020, and it continues to grow. So the largest segment are self-employed borrowers. Those borrowers who signed up for new business applications in 2020, 2022 are eligible for our bank statement program. So let's look at the results of our poll here, and I'll be quiet for a moment. Okay, 69% of you have not originated a bank statement loan in the last 12 months. 31% of you have. So for those 69%, thank you for joining us. But those 31%, obviously you're here to learn more from our subject matter experts. So without further ado, there's a question queue there. Keep those questions coming in. And Oscar, you're going to take us through some highlights of our bank statement programs.
Yeah, and John, you know, a stat that came out about 5 hours ago, the Small Business Administration announced that those applications for 2023 broke a new record for new business applications. So, like you said, it's a trend that keeps going up.
I thought I was supposed to deliver that content, Oscar. No, that's great intel, Oscar, and that's what we're here to do today, to share about the opportunity out there. It's not, so almost 70% of you here, guys, this is really good stuff. So Oscar, go through and thank you for sharing that, Oscar.
So for the 70% of you that have not closed a bank statement loan yet, we are what we like to say, we're basically training wheels for you here. We will work with you hands-on to help you pre-approve your customer. Chris is going to go over the steps and the pillars to pre-approve your customer for a bank statement loan after I've covered the highlights of the bank statement program. But if you haven't jumped in the pool yet because maybe you're just unsure about how to get somebody pre-approved for a bank statement loan, back in 2020, we worked on Fannie Mae and Freddie Mac loans. So I had an opportunity to work on those two with some of my customers. And I can tell you that in my opinion, bank statement loans are just easier to do because we're calculating the income for you for a self-employed customer. So you can go on about your day and hunt for more business while on the back end, we're working on it. So without further ado, I'm going to cover the highlights of both the Bank Statement Elite and Standard Bank Statement Program. The key things that stand out most, let's go over the overall highlights first. We can go up to 90 loan to value on a bank statement loan on a primary residence with no MI. The max loan amount is $3.5 million with a minimum loan amount of $150,000. We can use both 12 months of business or personal bank statements on the Standard and Bank Statement Elite product. Now, the difference between Elite and our standard option, well, aside from a credit perspective, we have 48 months, which we require on Elite. Typically, Elite is for a borrower that is a little more credit worthy. So we normally have, they normally get the benefit of a better rate. So 48 months for, let's say, a bankruptcy, foreclosure, deed in lieu, or short sale. With our standard option, we will go down to 24 months. The rates that we quote normally are 30-year fixed, although we do offer interest-only options. The borrowers do have to be in business for a minimum of 2 years. And Chris will go further into detail that later on. We offer both all three: purchase, cash out, and rate and term and refi. Typically, we see that the bank statement program is going to help you increase your average loan amount because a lot of these self-employed borrowers are the ones that are buying luxury properties. All right, so and Chris is going to cover this, but we do require verification that the borrower has been in business for at least 2 years. Typically, that comes from an accountant or tax preparer, a third-party accountant or tax preparer. It can also be a legal operating agreement, and we will also verify their ownership percentage in their company. Now, some of the other nuances of the program on the standard option, we do allow up to 1 times 30, so 1 mortgage late in the past 12 months. They're a little more flexible on credit there. And now back to the Elite option, we can actually go up to 85 LTV, no MI, on an investment property or second home.
Yeah, that's big. That's big.
Yep.
Yeah. Just again, I mentioned it earlier. Just want to mention it again. Connie was asking. A recording of this will be sent out to you before end of day today. And everyone asked about a slide deck. Everything we're doing today is from Angel Oak's website. Easy to navigate, easy to go through. But for I think it was Peter, we're going to send out a recording of this, but there is really no slide deck. Everything we're going to do here, like Oscar mentioned earlier, Chris is going to go through a 1003. He's going to go what we'd like to see on the credit report. He's going to go through our business questionnaire that we require to be filled out. As Oscar mentioned also earlier, we're going to go through how to price a loan, how to submit a pre-qual to us. Also, most importantly, is our marketing portal. We're going to cover our marketing portal at the end. So it's really imperative that you stay here for this entire time we've allocated for today, because we're really vested in helping you grow your business. So Oscar, Chris, anything else on bank statements as far as highlights? I know we're going to get a lot of great questions coming in here. We're going to answer those. So anything else to add? Nope. Okay. So Chris, let's talk about what do we like to see on the 1003, Chris? Because this is really critical. You know, this is how we learn everything about the borrower, right? Not just and with the credit report. So go into what we want to see on the 1003, what we like to see as far as trade lines on a credit report, and then let's talk about the business questionnaire, Chris.
All right. So first off, know that we have a team of AEs that are all experts at this, and they are all very willing to hold your hand literally from the pre-qualification stage to the closing stage. So the first step is to set that 1003 up properly so that you're painting the picture of what you're trying to get accomplished, and we'll help you do that. So on a 1003, the main thing you want to look at, as Oscar said, was at least 2 years of self-employment. We have to have that, even though we're only looking at 12 months of bank statements, okay? So 2 years of self-employment, you can leave the income blank on there. And the reason for that is we are going to determine that income for you. And I'd say to realtors quite often on behalf of our broker partners, it's very convenient in that you will have an income determination back as fast as 4 hours. So Oscar and I and other AEs actually review the credit in 4 or 5 minutes. So you have 3 C's in underwriting: credit, capacity, collateral. So the AEs get the credit done in 4 or 5 minutes. The bank statement team does the income in 4 or 5 hours. And when a realtor puts that buyer in a car on Saturday, you know exactly what they're qualified to purchase, their buying power. So you could say $876,000. Now, a conventional loan, you can't do that, okay? So that gives you an added benefit as a loan originator in using bank statement loans. On your 1003, no income, think of it this way. It's just like a conventional loan, except we're going to plug that bank statement income determination in where the W-2 income would normally be. That's it. That's that simple on the 1003. Now on the credit, as I was saying, the AEs review the credit. It's kind of a pre-underwrite, and we're looking at credit score. You need a 640 to enter into this program. The higher the credit score, the more LTV you can get. And then on trade lines, that's really the only thing as I look at them, I'm like, do they have adequate trade lines? What we're looking at there is 3 for 12 months or 2 for 24 months. We recently eased up on that where those don't have to be open and active. So we're looking back during the history of that report. We don't decline based on that anymore. I haven't declined one because of trade lines in probably 6 months. They're very easy there. So 1003, no income, credit report with at least a 640. And then we move on to what is this borrower's business about? And that's where we get into the business questionnaire.
Yeah, so Chris, before we get into business questionnaire, I want to, touch on something, you talked about it very like matter of fact, but, you really, I think you downplay your expertise is what I'm trying to say is, Chris, Oscar, and all our account executives across the country, they pre-underwrite that file. They look at credit. They look at 1003. They evaluate the bank statements after they come back from the team that calculated those bank statements. And that's all they do is calculate that bank statement. So Chris mentioned it before you put that, getting a little bit of feedback here. So I don't know if it's from you, Chris, but before you put that borrower in that seat of that car on that Saturday to drive around and look for homes, That's the income that Chris and Oscar and all our account executives get. That's the income that's going to be used throughout the entire underwriting process. You know, how many deals do you get, Oscar or Chris or any of our other account executives, where someone wrote up a pre-approval, then the tax returns came in, and they realized they don't qualify for a house that they already put the contract in? That's real life situation. So,
Yep.
as I always do, I'm going to provide a PSA, public service announcement here for you today. If you know you are going to meet with the self-employed bars, yes, get their tax returns. Go down the route you'd go down for traditional full doc, get their bank statements. And Oscar mentioned it, it's those self-employed bars that are buying those luxury homes. You will increase their purchasing power 2, 3, even though I've seen it up to 5 times using bank statements versus tax returns. And that's the market where we're starting to see some relief from, you know, multiple buyers, multiple bids on houses, is that luxury market. And so just wanted to share that, Chris. But go ahead, Chris, just cover some highlights here of the business questionnaire that we do require, but it's really only got about 10 or 11 fields that are required to be filled out. So.
All right. So on the business questionnaire, what this is really doing is painting the picture of what this business is about. So you give us the company name. If there's a website, doesn't have to be one. Give us that. Give us the owner's name. We're going to take this information and verify that that company is bona fide and active. You can go on your Secretary of State website and type in the registered agent's name or the entity's name, and it'll pop up, you know, how long since the inception date, and that proves your 2 years of self-employment. So this form is used for a variety of things. It tells you the percentage of ownership, because in some cases the income is, you know, for example, if you own 50% of the company, we're going to count 50% of those deposits based on that percentage of ownership. The other questions that we have down here, you know, one is tell us a little bit about your business. And what that's asking there is so we can better determine what their expense factor is on this business, because we like to do what makes sense, okay? So by that, I mean, as you see the questions, it says, how many employees do you have? Do you have a brick and mortar? So let's look at the two extremes here, okay? So let's say you're a realtor, work for Keller Williams, you're working out of your house, so no brick and mortar, no employees, no inventory. We're really going to be favorable to that and count 85% of your deposits or use a 15% expense factor. Now, let's take the other end of that spectrum, and let's say you're a very high-cost operator. Let's say you own a restaurant, and maybe even 2. You've got 2 brick and mortar locations, 40 employees, high food costs, high beverage costs, high labor costs. So we're going to hit that one as hard as we possibly can and apply a 70% expense factor, okay, counting 30% of the deposits. And I always kind of joke after I say that, go, do you know how many loans that's killed for me? 0. Because most of those guys are depositing $300,000 or $400,000 a month, and it leaves them with about $100,000 a month of income to use. So that kills absolutely no deals. But we like to do what makes sense, and this is the form we use to determine what really makes sense. And also, our standard default when we do business bank statements is 50%. But if you feel like that's not accurate or it really doesn't make sense for what our borrower does, let's say they're a consultant, you can use this same form and give it to a tax preparer or a CPA. It doesn't have to be the person who prepared those taxes, and they can write a statement that says, hey, I believe that 30% is a more accurate expense factor to use, and we can use that if we're a little off on the income. So this is a super helpful form in getting your loan to DTI.
Yeah, and Chris said it early on, and I want to make sure everyone understands this. You know, everyone starts to think non-QM, oh, it's a different beast. But Oscar, Chris, all of our account executives, of course, they're going to hold your hand throughout the entire process, from pre-qual to disclosures to submission to underwriting to closing. There's not an AE in this company that is not dedicated to you closing loans and growing your business. So we've got, Chris, thank you for covering that. So it's really not that much information that we're requiring to get, a better background on what your borrower does. We've got a lot of great questions in here. I see a lot of people have jumped on after we started, so I just want to make sure everyone knows this is being recorded. This will be sent out before noon tomorrow. If we don't get to a lot, I see a lot of great questions building up in the queue, and we're going to get to those. If we don't get to your questions, we will find your AE and get your AE to reach out to you before end of day tomorrow. So some questions coming in here. Oscar, I'm going to throw the first one over to you. Why would you go personal? Yeah, Norman's got a lot of great questions here, so I'm going to ask a couple of Norman's questions right off the bat. Why would you go personal versus business, Oscar?
So that's a great question, Norman. So there's a benefit, and I'm going to cover it, but to start with the standard scenario, you may have a customer, Chris hit on it earlier when we were introducing ourselves. You may have a customer who's only 1099, and a lot of times those customers don't have a business checking account. They operate their business out of their personal checking account. So when you're on a call with your customer and you're vetting them, whether you should use a personal or business, well, we just want the account where they're using to deposit their business income. If that happens to be their personal checking account, we can accept that. Now, the benefit sometimes of using a personal checking, and Chris mentioned the expense ratio, you may have a customer who has both a personal checking and a business checking account. They are depositing business revenue into their business checking account, but they are paying themselves to their personal checking account. When that happens, we use a personal checking account, and we can prove that they're paying themselves from business to personal. We do not need to apply a expense ratio. We can use 100% of those deposits. So that is the advantage there of going with a personal checking account.
Yeah, and Chris, the other question from Norman was, what's more advantageous to go between 12 months and 24? Why would you give us a couple of scenarios and Chris, you close a boatload of units, so you see a lot of scenarios. So, let's talk about why would you suggest going 12 versus 24? Is there an advantage to going 24 versus 12? Kind of just give us some scenarios there, Chris.
All right, so there is no LTV or rate advantage by going with 24 months and supplying that extra 13 to 24 month period. There used to be, but there's not anymore. So I always start with 12 months. The only time that I would ever say, hey, let's look at that 13 to 24 month period and see if it helps us is, let's say we get the income determination back and it says your DTI is 53%. And so I would reach out to the LO and go, hey, let's look at that 13 to 24 month period, see if that the deposits were a little bit higher during that time period. So then we would average all 24 months. That brings your DTI down to 49. Off we go to closing. That's really the only time I would recommend 24 over 12.
Yeah, and some other places I've seen it used, Chris, is like if someone has seasonal business, let's just say they're a landscaper, right? And a lot of their business is, say, from March through September. And so there's September, October, November, December, maybe a lower income. But again, we'll look at 24 months and say, hey, yes, this person's business is more seasonal, but we have 2 years of that. So, I always say we're calculating the income for you. Person like Oscar, Chris, all of our account executives, they're going to put your borrower in the best position, the best program that suits your borrower first. So let them do their thing that they do so well, like Oscar for 6 years, Chris for 8. There's probably not a scenario they haven't seen that they know how to work around it. And guess what? They're on the same comp plan you're on, right? When it closes, you get paid. So,
hey, John, another common scenario, you mentioned it, with new business applications, those borrowers that applied in 2022 that now can qualify for a bank statement loan are starting this year and the rest of the year. Well, a lot of them, they started their business 2 years ago. That first year, their deposits may not have been strong because they're just ramping up their business. So then the 12-month option may be the better option, because unlike with taxes, we're looking at the most recent statement. So we're going with the most recent statement and 12 months back or 24 months back.
Yeah, and that's a great point, Oscar. And one of the things they mentioned 1099 and mentioned a realtor. 9% of the deals we close are actually realtors. So, Chris, another great question coming in from Eddie. Does the borrower do they have to have their own business or commercial space? And this comes back to you mentioned, a realtor, maybe they don't. So go ahead, Chris, talk about, commercial space or business space or whatever.
The answer is simply no. We do a lot of these where the borrower works out of their van or truck or rents a space somewhere from someone else. So yeah, it's just simply no. They just need to own the business, really.
Yeah. So again, Chris and Oscar are going to work with you to find out. They're going to ask those second, third, fourth level questions to get you to give them some info that will help them. So I'm going to answer Ted's question. Ted's asking, does Angel Oak have a HELOC for a bank statement program? We do on a closed-end second, Ted. We will be rolling out a HELOC bank statement feature. We just rolled out HELOC for full doc. We will be rolling out a bank statement feature for self-employed borrowers, which I think is going to be really a pretty much game changer on that. That should be coming in the next week or so. Stay tuned. That's why you need to always stay in touch with your account executive. That's why you need to sign up for getting our weekly emails, because we make those announcements and launch new products consistently. So I think I'm pronouncing Ray's name correctly, spelled a little different, but Ray, Oscar, can you use both personal and business? And then take this one step further, Oscar, I think you know where I'm going to go. Can you use two sets of business accounts?
Okay, so to start with personal and business, if we haven't mentioned it already, we do make a lot of exceptions. And, John, I don't want to steal your thunder. You usually use.
Go ahead. You've already done it. Go ahead, Oscar.
30% of the loans that we fund have exceptions on them. So can we get the exception? That is something that you definitely want to discuss with your AE. There are some nuances to it, but we can use a personal and business, which would mean two sets of bank statements or two sets of business bank statements. The exception comes with the personal and business, actually in both cases. Okay, so the request, the exception is they would make the exception if they are not commingling funds. We have to make sure that we're calculating income correctly for your borrower, and that we're following the ability to repay. So if someone has a pattern of moving funds to and from the account, we're not forensic accountants. We want to make sure that we're calculating their self-employed income properly. So they cannot commingle funds between two accounts. So if they're managing both accounts separately and they're depositing funds into both accounts separately, that is an exception that can be made.
Yeah, and I just want to correct one thing. There is a benefit. Thank you, Oscar. And then, Oscar, I'm going to come back to you, but I want to just jump in here with just to make sure we get this. What about a W-2 bar? I'm going to go to Chris on this. What about a W-2 bar and a self-employed bar? But Chris, I do want to just correct us on one thing. There is a benefit to going 24 versus 12 months, and that's at an 85 and 90% LTV. There is a pricing benefit there. Just want to make sure that we're clear there. So, but Chris, Oscar talked about multiple bank statements, personal, business. Talk about one person's W-2, one person's self-employed, and even talk about one borrower is W-2 and self-employed, if you don't mind.
Right. So we get that question a lot, where you have a married couple and one is W-2, one is self-employed, and we review that bank statement income, and you might find that you're coming in at 60% DTI, and we've tried everything else we can to get the expense ratio down, and we just need a little bit more. And sometimes the LO will ask, hey, I've got a spouse that's a W-2, they could be a Walmart greeter, whatever it is. Yes, we can do that. We can add the W-2 on top of the bank statement income. I call it a bank statement W-2 hybrid, and that brings your DTI back in line. And you can even do that with it's not a spouse, it's the borrower themselves. So they've got a self-employment gig, and then they've got a W-2 job in addition to that. We're seeing more of that nowadays. and we can add both those incomes together, W-2 and bank statement, to qualify.
Yeah, Chris, and you mentioned it, and I just want to hit that home. You know, Oscar stole a little bit of my thunder with the 2023 stats, but a lot of people, like Chris said, a lot of people are starting their side hustle while they still have their W-2 gig. And all we need to know is that self-employed income 30% of their total, and we can go bank statements with that W-2. That's huge, because no one really wants to give up the security of that W-2 right now while they're building their business. So, and I'm going to give a shout out to Chris, because Tracy said Chris is actually great at hand-holding through the entire process. So, shout out.
Thank you.
So, so there, got me off track here. So Claudia is asking, I'm going to let Oscar ask this question. Claudia is asking, Chris mentioned 13 through 24 months, Oscar, versus 1 through 24. If there's more income in months 13 through 24, wouldn't that be decline in income, Oscar? What would you do in that situation? So if you have a lot of income in months 13 through 24 and less income in months most recent 1 through 12, what would you do with your loan officer for that borrower, Oscar?
Correct. And so we do look at declining income. If income's declined over the two 12-month periods by greater than 35%, then what we would do then is me or Chris, we would give you a call and let you know, and then cut it to 12 months rather than doing 24 months.
Yeah. So, and then Chris, I'll ask Mike, because I'm here in Texas. Mike, unfortunately, right now that HELOC is not going to be available for primaries in Texas. I am working hard on it, Mike. I will make it my personal issue to get it available. So I'm working hard on that. But Mike, great. Thank you for asking that. Chris, is this program available for 1 to 4 units? I know Oscar mentioned earlier we go to 85% LTV for second homes, especially in your market, second homes, investment properties. Talk about investment properties 1 through 4 units.
Yes, it is available. I get that question a lot. You know, some people think maybe it's just purchase, maybe it's just a single family residence, maybe it's primary only. It is a pretty universally usable program in that it's primary, second home, investment property, 4-unit, you know, 4-unit investment property. You could even use it on a non-warrantable condo. So there's, and the LTVs are really strong. I think Oscar touched on that at the beginning of the call. I think it's super advantageous to do an 85% LTV bank statement loan on a second home, or see how high you can get based on your credit score on an investment property. So yeah, it's a great utility tool for sure.
So Chris, you mentioned LTVs, you know, and one of the things I had written down here that, you know, we always want to cover. Let's talk about gift funds, Chris, right? Let's, you know, not everyone has the down payment. So let's talk about gift funds and what we allow here at Angel Oak.
All right. So on this program, and we see this a lot, some people still call and go, hey, I want 95% LTV. And I'm like, you know, our secret sauce here is that we have a little bit of skin in the game. So our max LTV is 90, but let's say you've got like a 640 credit score. So you're just barely getting into our program. You know, if you have a 780, the world is your oyster. You can get pretty much anything, but you got a 640 because you had some credit woes in the last year or two. We do allow gift funds, and here's how it works. As long as the borrower has 5% of their own funds in the transaction and can cover 6 months reserves, the rest can be gifted. Now, it's typical gift fund rules. It needs to be an immediate family member and so on, but it's super forgiving on that. So I joke around too. I probably shouldn't say this on this call, but we only season those funds for 30 days.
Don't worry about it.
I'm not going to get in trouble for this. So I joke around just to, I guess, sell the sizzle and bring this home. But I joke around and say, you could rob a bank, you know, 45 days ago. And as long as we don't see that deposit, we don't, you know, that's the sourcing of it. We just want to know that it's been in there. I didn't say that. You can delete this from the recording. But otherwise, we do allow gift funds. And we do only source the funds 30 days.
Thank you, Chris.
That's a joke.
No, it's all good. But, I think it just, it shows the expertise that Chris has, knowing how to get deals done. Hey, Eddie's asking, do we have any marketing ideas? Eddie's, that's how we're going to close our call today. We're going to talk about marketing, which I believe, self-employed borrowers, we talk about it. It's on the front page of our home screen on the website. It's an underserved. We help serve underserved borrowers. Our marketing portal is probably our most underutilized part. But Eddie's also asking here, Oscar, what's the max DTI we allow? Which is a great question. What's the max DTI we allow on our bank statement program?
That's a great question. So standard is 50%, but if the LTV is greater than 85%, then it's 40/50.
Right.
By the way, because we were on the topic of cash to close and closing costs and gift funds. Something that we're seeing a lot more is seller concessions, seller contributions. So I did want to mention that on a primary residence and second home, we can do 6%, and on an investment property, 3%.
Yeah, so Chris, Ricardo's asking, you mentioned it, Chris, and that's why I'm going to go back to you. You mentioned using the business questionnaire. Go over the percentages, like if they're 100%, go over if they're 50%, and then if you don't mind going, if they're less than 50%, what we'll do in that case, if you don't mind, Chris. Thank you.
Okay, so our standard default it's just where we start. It's just a starting position is 50%. And, Oscar and I and the rest of the AE team look at, hundreds and hundreds of these every month, and usually 50% works. These guys are affluent, they're smart, they're depositing a lot of money, and just half of it will cover you. But if it doesn't, so we refer back to that business questionnaire, and the buckets that we have, and I'll start with the least, is 15%, then 30%, then the standard default 50%, and then that, the dreaded 70%, which I said has never one time had a negative impact on any of my loans. I hope Oscar can say the same, and I imagine he can. But so you can get a tax preparer or CPA to fill out that form, and you'll see there's a little box there at the bottom, and it says expense ratio. And if you get a tax preparer or CPA to put in 30%, then I've not seen us not use that. Okay, so that helps you out.
Yeah,
and as Oscar said too, on
sorry.
personal, we use 100% of the deposits if you've got a business account. So that's very helpful too.
But Chris, talk a little bit about it. So if they own less than 50%, they can't go business, right? They'd have to go personal.
Well, that's correct, unless you're using personal bank statements where you can own a minimum of 25%.
There you go. Yeah, that was the answer I was hoping to get for Ricardo. So Ricardo, hopefully that helps you out. Oscar, I'm going to ask you this question, and next week we're doing our DSCR, so this might help Eileen here a little bit. Investors with multiple rental properties, can you use rental income from those properties on a bank statement borrower?
We can take 75% of that rent, as long as that rent is deposited into an account that's separate than the account that we're using for income. We can take 75% of the rent. So we'll condition for at least 2 months of bank statements in the lease agreement, and we'll take 75% of the rent to wash PITI.
Yeah, so, we're about 20 minutes at the top of the hour. I know we've got still a lot of great questions. I know we've got someone answering a lot of these questions behind here. So, hey, Chris, let's take us to our pricing engine, and then let's talk about how to submit a pre-qual, because a lot of people are also asking about, we want to be very respectful of the time. A lot of people are asking about marketing, So, Chris, let's take us through, a pricing scenario. And as we said, everything we're doing here, again, this is recorded. We'll try and cut out Chris's comment there. No, this is recorded. Everything we're doing here today is from our website. It's easy to use. You can see we do call it, innovative solutions for underserved borrowers. So everything we're doing, we have a lot of great tools. One of the best tools we have is our non-QM quick quote. We could get to it from 2 places here. And then I'm going to have Chris just walk me through a scenario here. So And Chris, just talk about this. I'll fill in some of the blanks while we're going through this. So,
Okay. So the beauty, the real beauty of this quick qual is it has our matrix incorporated into it. So it's not just your basic, and I've seen them out there, and I know you guys have seen them out there. It's just a pricing engine. Okay. This one is way more than that. This one has the matrix built in. So if you put in, the 640 score and you're looking for that 90%, it's going to kick it back and go, no, you can't have that. Or let's say you've got a 780 score and you put in, I only need 75 LTV. It will refer you back and say, hey, just so you know, you can go all the way to 90 on that. So it's a super intuitive and smart tool with the matrix incorporated in it. John, one thing, if you can, show them that income documentation box.
yep.
To me, I tell people this all the time when I'm going through it with them. This is where the magic happens with Angel Oak. A lot of loan originators really, they only know that one top box, full doc. And, that's the good old vanilla Fannie, Freddie, FHA, USDA, VA, something that ends with an A. Angel Oak can really change your career here because you got 1099, you've got P&L, you've got personal bank statements, business bank statements. All these are for self-employed. And, on another webinar, we'll go over things like asset qualifier and DSCR down there. But to me, this quick quote tool is probably the greatest tool in the mortgage industry. You can put it on your cell phone. You could be, you could be at a bar mitzvah, or a barbecue, and you run into a self-employed person and they go, hey, what can you do for me? And within 10 seconds, John's already got it done there. You can tell them what the max LTV is, what the rate is, what the cost is, the whole 9 yards. So, John, show them what you got there. So let's do the bank statement program. That's what we're talking about today. And there you go. So you ask for 75. It tells you that hey, just so you know, you're qualified for 90, and that's no MI. There's never any MI. As Eric Morganson says, I can't even spell MI. So there's your rate at 7.5. And as Oscar was talking about, you got the regular bank statement with the more forgiving credit. And if you can look over to the right, it says housing event seasoning is only 24 months. And then the bank statement elite is 48 months. So you got to have a little bit more elite credit to get that elite program. In this circumstance, the rate looks to be exactly the same. So you can go with whichever one you prefer. You might have a different cost in there. And click on that, John. You can compare that if you like.
Before we go there, Chris, Eddie's asking about obviously how do they get paid. We have a couple of options available here: borrower paid or lender paid. So those are two options, Eddie. So yeah, it's really important that you do get paid on these loans. We totally understand that. So yeah, I'm going to click on the blue box here to view our rate stack. Go ahead, Chris.
All right. So as you can see there under the elite, you've got 7.5 actually gives you a pretty solid lender credit towards closing costs. So let's say did you go borrower paid or lender paid, John? I didn't have my glasses on.
Here, Chris. Yep.
So that'll help the borrower out with kind of countering the origination costs.
Yep. So Chris, sorry, Chris, this is available 24/7. You don't need to be an approved broker with Angel Oak, right? So this is available again 24/7. Great. It's great to run scenarios there, different pricing options, because there is some different pricing between say 80 and 75. So you can play around with that as you consult with your borrower. So Chris, we've shown everyone how to run a pre-qual. So how do they get you, Oscar, all the other account executives across the country? How do they get you a pre-qual?
Okay, so you're right there. Okay, first let me reiterate that you do not need a login to get to this point. A lot of people will be like, hey, I'd like to send you a loan, but I don't have a login. You could actually be in prospect status and shop the rates and the LTV. So the next step is where John is. You can select any option. Now, keep in mind, you're not committing to anything. You're not locking. So just click on any of them to get to the next step. And John, if you want to do that, show them how to deliver that pre-qual to us. So this is step 2. I advise people usually on a bank statement loan just to skip this step. It's asking for a 3.4 MISMO. We don't really read those as we're pre-underwriting these. Then you put in your account executive's name, your company name, borrower's name, LO's name, phone number, email, NMLS number, and then here's where the rubber hits the road. This is where you drop your 1003, you drop your credit. If you have a 1008, that's nice, so we can better calculate the DTI, but you don't have to have it. And then below that, you just drag and drop those bank statements in there, hit submit, and, you know, really within 24 hours, you should have an income determination back. And I like to send, and you also have the business questionnaire that we talked about right there. So you can click on it, download it. The borrower can fill it out. Their tax preparer can fill it out. And, you know, you're pretty done at this point. And as I said, conventional loans can't do what we're doing once you hit that submit button in the bottom right. You're getting a credit underwrite, you're getting an income determination, and this is on a TBD property that has not even been disclosed.
Yeah, I think that's really important, Chris. You know, we will do a pre-qual for you on a TBD. And, you know, and I think another thing that Chris mentioned here is, you know, I mean, so Oscar mentioned it earlier, 30% of the loans we close here and fund don't meet our guidelines. So if Oscar's not 1,000% sure, or Chris isn't 1,000% sure, we have a help desk. We're going to get that exception up front. So it's not like, hey, send it in, we'll see if we can do it. We do this all at the pre-qual stage. While income's being calculated, if we have a question on credit depth, payment shock, any questions we have, we get this exception up front. So that's what you're using throughout the entire, and that exception follows that borrower and that address through the entire process. So, and that's really it on getting us a pre-qual. It's pretty simple. We're calculating the income for you. Again, just make sure the 1003 before you submit it doesn't have income. I prefer you take it off at the pre-qual stage so people don't forget to add it there. And be thorough. Send us a complete 1003. That helps us move this along. We know everything today is about speed, getting that borrower off the street, getting that borrower into disclosures and moving it forward. So the better you can be up front with the 1003 credit report, your conversation with the account executive is so much better throughout the process. Oscar, Chris, we have confirmation that Chris is an excellent hand holder. So, you know, we will do that for you at that point. All right. So we're about almost 12 minutes before the top of the hour. Oscar, let's talk about, Eddie's asked about it, Antonio's asked about it. Let's talk about the Holy Grail. How do you market to these borrowers?
So again, for those the 70% of you who have not closed a bank statement loan yet, something that Chris and I and a lot of the AEs here at this company do is we will also co-present with you. So if you're interested in teaching your referral base how they can capture more self-employed borrowers so that you can get them pre-approved, we'd be more than happy to schedule that conversation and we can present with you. We'll teach your realtor base how they can get listings with a bank statement program. So I'll give you a common scenario, and John actually mentioned it earlier. Say a lot of customers nowadays will have a W-2 job and then they'll start their side hustle. Eventually, that side hustle grows so much so that they can leave that W-2 job. A lot of those customers also bought their first home with that W-2 job. Maybe they've grown their family now and they're looking to now buy up and sell that property. Well, the way that you can help a realtor land a listing or a realtor can land a listing would be by promoting the bank statement program. You know, that customer may be knocking on doors trying to get pre-approved for a loan because they know that they can afford that luxury property, but they're getting declined because that lender may not offer a bank statement product. Well, you do. So you want to make sure that you educate your realtors, let them know that you do offer this program, because there have been plenty of times when I hear that a realtor was able to represent both sides of the transaction, both represent them with that listing and help them purchase a new property. So after those presentations, normally a lot of the realtors ask for marketing content, which we have directly on our portal. And so if you're interested in accessing that marketing content, in the chat box, please ask if you don't know who your AE is, or if you're not set up with us, just mention it in the chat box. That way we can follow up with you after this call. We'll get you set up and we'll make sure that you get your password to access this marketing material. So all you have to do is click on the marketing portal, drop down menu, and let's start with the flyers. So we have all of these unbranded flyers. You do not need to hire a marketing team. All of this is completely free, and you can edit it directly on the website. As long as you know how to spell your name and you know your phone number, then you have a marketing company. I mean, you just enter your name and your phone number, your email address, and you can also upload your logo. You can upload your picture as well. And I've seen these get co-branded often with a loan officer and a realtor. And then all you have to do is download it, and it'll download directly to your desktop. Now, once you've done this, you can also change the program, and then that information is going to transfer over, and then you can download the flyers for that program as well.
Yeah, so Oscar, a perfect example of this, the gentleman Doug has a flyer here, right? So I just clicked on the investor cash flow, and guess what? Doug's contact information is showing up for our investor cash flow, which will be next week's deep dive webinar. So go ahead,
by the way, everybody, so when you have your password, this will be private to you. So this is just their training, and you know, this was a training that was done with Doug to show them how Doug can set up their profile.
Exactly.
And all the information is there, but yours will be completely private to you. So we also happen to have flyers for CPAs. So who's preparing all these tax returns for these self-employed borrowers and saving them tons of money, right? CPAs. So those are great referral sources for bank statement loans. You want to contact your CPA today. You'd be surprised at how many CPAs, accountants, and tax preparers have no idea that this program exists. And they're going to be a great referral partner for you.
Yeah, so Oscar, everyone's getting ready to go in the next few months, right? Visit your CPA, you know, or if you know a CPA or a financial planner. Oscar brings up a great point. This is a great time to ask them, you know, about their customer database. You know, Chris Parker mentioned Eric Morganson out in California. You know, nothing has MI, but Eric Morganson has a great line where he brings up, how do you find a self-employed borrower? Open your front door, you will trip over them. Between landscapers, you're going to drop off dry cleaning, anyone else in that strip mall, probably a self-employed borrower. So they are out there, they're in front of you, they're yours for the taking, because guess what? No one else is marketing to them aggressively and proactively. So go ahead, Oscar.
Yep. Aside from, you mentioned it, I mean, you walk out the door, you're going to trip over one. People that you work with on a daily basis, realtors are self-employed. A lot of them need bank statement loans or another program. John mentioned it. We have a DSCR webinar coming up. A lot of realtors are popular borrowers on that program. Don't be surprised if you give a presentation to an office of realtors and you walk out with a loan from one of them that needed. So I'm going to give you one last referral source. It's probably, I would say, the most popular option. You want to visit your local, national, or regional bank that have small business bankers or business bankers in the office. Those are amazing referral sources as well for bank statement loans. You know, they're just doing traditional financing, and whenever they get a self-employed customer that they unfortunately need to turn away, they don't want to have that conversation without some added value. So what they'll do is, if they know that you offer the product, they're going to refer that customer to you.
Yeah, Oscar, just touch on, you know, social media, because, you know, everyone's out there using social media from a standpoint. Are you posting social media? Are you doing social selling? Are you doing, you know, what, you know, and again, you know, everyone, you know, how do you approach this? Everyone's asking, how do I start? Just start by grabbing one of these, you know, grab a flyer. We have a flyer. We have social media posts, let's look at bank statements. Go ahead, Oscar. I'm too busy yapping. Go ahead. You talk about bank statement.
So I see a lot of my customers on Instagram or Facebook, on LinkedIn is another popular place. There's a big success story that I have with a customer who had actually never closed a debt service coverage, a loan period before. And all he did was he took a DSCR flyer, or one of these here from the social media slides, and he posted it on a investor Facebook group. And he landed a borrower that needed to refinance 11 properties. He'd never closed a loan before, and we got him that exception. So that's how easy it is. It's a matter of making the effort and actually putting it out there. And that's why we say that this is underutilized. So You do not need to reinvent the wheel here. We have the marketing content. Everything is actually personalized as far as the dimensions are concerned for Instagram or Pinterest or or Facebook or LinkedIn. We have the captions if you're targeting borrowers. We have the captions for them. If your audience is going to be a realtor, we have the captions for them as well. And then, John, if you scroll back up, there are two more options that we have here. We have our whiteboard videos, which are 60 seconds. Again, everything is completely unbranded. They're very easy to download. And again, you can post these. I've seen these on Instagram. You can post them on Facebook. And last but not least, I did mention the realtor presentation. We do have the presentations here. Again, all they're missing is your information. They're already pre-done. And before scheduling that presentation, you want to get with your account executives, at least I would say 2 business days prior to the presentation. We can go over what we're going to present, what we're going to talk about, because every market is a little bit different, what to really key in on. But these are already done for you.
I just brought up the skeletal outline here. Oscar, can you and Chris see what I have here?
Yeah.
Okay.
Yes.
So, Oscar, you mentioned, you get 12 realtors in a room. The odds are you're going to get one of their loans because 9% of the deals we close include realtors. This is a powerful presentation because we have 70% of you, 69% of you have not originated a non-QM loan, a bank statement non-QM loan in the last 12 months. 30% of you have. So a lot of you joined us here because you want to learn more about it. Imagine you're a referral source if they learned about non-QM loans. I am telling you, it's the light bulb aha moment when you present this. And I think the most powerful thing is Oscar would present it on your behalf. Chris will present on your behalf and they go in. I'll use, I think it was Eddie. Eddie's asked a lot of questions here, so I'll use Eddie as an example. Eddie invites me to go with him to a realtor presentation. You get 10, 15, 20, 30 present. I go in there and I tell them I am just one of Eddie's investors. I don't say anything about Angelo. I just say we're going to talk about some of these programs out there. Eddie has access to these programs and other programs in addition to all the government programs. I literally don't bring cards, don't bring a name badge. And I jokingly say it, didn't rob a bank, Chris, but I go in there like I'm in the witness protection program. And literally, we go in there because you can see Chris, Oscar, they can present, they know these programs inside and out, but they can tell them, what are you going to do when you get a self-employed borrower? You're going to go to Eddie. Eddie is your loan officer who knows these programs, who will have Chris or Oscar hold their hand through the process, and it will be seamless. So I've talked a little there. Chris, I know you do a ton of these. Anything you want to share regarding realtor presentations?
Yes. I think please invite your AE out to do it, because I know you guys as LOs struggle every day with saying the same old that all your competitors are saying, okay? I ask realtors, I interview them, and I say, hey, what are the LOs telling you? And they say, I have got coffee shooting out of my ears, and they all say the exact same thing. I've got competitive rates, great service, local processing, direct to Fannie and Freddie, and by golly, I answer the phone 24/7. So what this bank statement program allows you as a loan originator to do is to differentiate yourself from all of those guys. You know, the realtor doesn't want to have another coffee and hear the same thing. So you can start off with these realtors by immediately engaging them on the bank statement program. Ask this question. Everybody in this room that writes off your home office, your cell phone, and your car, raise your hand. Every single realtor in that room will immediately engage and understand where you're going with the benefits of this product with that one question, and then lay it out on them. Give them the flyers. Have your AE talk about how it's done. In this call, we've shown you how to do this. You just got to go out there and get it. Differentiate yourself from the rest of the crowd. Show them your benefit. Get that pre-qual in, and we're going to close that loan, and you're going to get more and more and more.
Yeah, and last week we did trends. We did trends in non-QM, and Eric was on there. You know, we're all in the business of quoting Eric Morganson. He's like, it's go time. It's really go time. And take advantage of these tools we have for you to grow your business in 2024. You know, they're saying, I think the MBA is saying there's going to be an increase, maybe 15% over 2023. Guys, go get your fair share of the market. Don't let 17% be what you're willing to settle for, right? Go out and get your market. Chris, anything else in closing that you want to provide or share in addition to, you know, the marketing part?
Yes. Have you ever seen that movie Field of Dreams? If you build it, they will come. Okay? If you guys as loan originators market this to self-employed and 1099 people, they will come. Okay? So use our social media marketing, do the lunch and learns. We'll do Zoom calls for you, but they're out there and they are underserved. Okay? And if you want to go on your President's Club trip or boost your volume or boost your paycheck, this is the way to do it. The affluent people do not work for the man. Okay, so you want the big loans. The only way to get them done is through a bank statement loan. Okay, so you don't have to be an expert at it, but I would certainly on your billboard, on your radio show, on your website, put the following 4 words: self-employed buyer expert, self-employed buyer specialist. You don't have to be, but Oscar and I and John, everybody in this company is one phone call away on a 3-way call to answer any question you have. And you can refer to us as your portfolio product specialist, your underwriter, your investor, whatever you'd like to call us. But think of us as working in that shop with you. We're right down the hall and we're always there for you. So please, please, please go after it. It'll really benefit you.
Yeah. Great, Chris. Oscar, anything in addition to close?
Yeah, guys, this is it's another program, again, another great opportunity. You see that the 30% of you that are already closing these loans, fantastic. The 70% that aren't, apply that to your market. You can just see there's less competition and there's more opportunity with the amount of business applications that there are. The seeds that you plant today are going to be the wins of tomorrow, right? Because you're planning your refi boom, right? As soon as rates start dropping, any bank statement loan that you help close, any self-employed borrower that you help close today, any loan that you close today, next year you're gonna reap what you sow.
Oscar, you're stealing everything from me. So yeah, Oscar said the wins you have today, the hard work you put in today will be your next quarter, quarter 2, quarter 3, quarter 4. Those will show your wins. So, in closing, Chris, thank you for, your professionalism, your expertise. Oscar, always, you're always jumping on these calls and, and educating and informing people on how to grow their business. So thank you for participating today. For the 30%, for those of you that have closed loans with us here, thank you for your business. For those who have not, obviously you can see the expertise that we have. Give us that opportunity to help you grow your business in 2024 and beyond. Again, this is being recorded. We will get this out to you before end of day today. I shared my personal contact information, my email address to everyone on here. If you don't know who your account executive is, email me, text me. I gave you my cell phone number. I will get you in touch with your account executive. The recording will be going out. There's a short survey. Give us how we can always improve, not just here on our webinars, but on anything we do. Next week, we have a deep dive into debt service coverage ratio. So look forward to having you all on there. But thank you, everyone. You know, look forward to a successful 2024. Go out and get more than your fair share of the market out there. So use our marketing materials to do that and leverage your expertise with your account executive. So have a great, wonderful rest of your day. Great 2024. Here's to being positive and growing your business. So thank you, everyone. Thanks, guys.
Thank you.